Withering a turbulent environment. Lessons from Bloomberg. Good evening and thank you very much indeed for joining us. Later on, I'll be talking to Selloua Chakri. She's the head of market structure at Bloomberg for the Maya region, and she'll be helping us understand how can African markets actually wither the cycle of volatility. My name is O'Brien Kimani and this is The Trading Bell. We'll also be looking at how the market has performed in the last 1 week, and our market analyst will be helping us to break down the figures for you wherever you're watching us from. This is The Trading Bell. Let's now talk to Chakri. Selloua.
Hi, O'Brien.
Thank you. Nice to meet you.
Nice to meet you too.
Please, and welcome to The Trading Bell.
Thanks for having me.
Good. First of all, I want to have your feel on how the market has behaved, has reacted, especially the Nairobi Securities Exchange, bearing in mind that we had elections less than a fortnight ago.
Mm-hmm.
Yeah.
So the market have been actually doing particularly fine, in fact, particularly well since January. And the Nairobi Securities Exchange has just kept on focusing on what they are doing best, which is servicing the capital markets in the best way they can. So they've been continuing to ensure that they have launches of products that are relevant for markets in order to increase and capture liquidity, as well as attract investors both locally, regionally, as well as internationally. Yeah.
And when we come to the topic of the day, we're discussing derivative markets. In Africa, we only have two markets that have this product. We're talking about South Africa and JSE and NSE in Nigeria. How complicated is it that we do not have many markets, with this kind of a product?
Right. So you're absolutely right that Africa in general has been a latecomer when it comes to the adoption and the launch of derivatives products. When you look at the history of Africa, you're absolutely right. So South Africa being one of them. In 1995, there's been the launch of the SAFEX derivatives exchange. And initially, one of the reasons of the launch of the SAFEX was because at the time, in 1995, the South African government decided to liberalize agricultural prices and stop putting a control on the commodity derivatives. So then moving on to 2001 within South African market, the GIC, which is the Johannesburg Stock Exchange, has acquired the SAFEX, who is now fully part of the GIC. And SAFEX offers a multitude of products within the derivative space, so they're pretty well sophisticated, well-established market within South Africa. So they offer things such as commodity derivatives, interest rates, currency, and equity derivatives. However, that said, there's been also other markets that have attempted to launch derivatives in the African continent, and this is in particular the case of Bourse Africa, which is based out of Mauritius, that also offers some sorts of derivatives. After that, there's been also the licensing of derivatives exchange in Zambia with BADEX, which is the Bond and Derivatives Exchange. Now, whether or not it's successful, that's a different matter, but there's been activity there. So when you look at the African market, there's also been a lot, particularly around the commodity space, a lot of already established stock exchange, commodity stock exchanges. And those stock exchanges are looking at to offer futures contract. So this is also the case, for instance, of Ethiopia. We also have Malawi and Rwanda that have expressed the will to be in the derivative space. So the bottom line is, yes, Africa has been a latecomer when it comes to derivatives markets, although within the commodity space, I would argue that commodities exchange have been established for quite some times. And if you look at, for instance, the case of the Alexandria Securities Exchange in Egypt, it was one of the oldest one. And now we are seeing the Egyptian, and even though it was operating for 100 years, since 1861, fast forward to 1961, operating for 100 years, the Egyptian government decided to put a hold on prices of cotton and stop the liberalization of the pricing of cotton, and has therefore that was the beginning of the end for the Alexandria Stock Exchange. However, in Egypt right now, we are seeing the Egyptian regulatory bodies looking at putting up frameworks in place to allow for the use of derivatives, particularly commodity derivatives. So there are a lot of initiatives in Africa. It's still at an infant pace, but there are a lot of initiatives in Africa to either establish new derivatives exchanges, or if you are already in an existing exchange, to launch new products such as derivatives. And we can also say this is the case, as you said, of Kenya, who are going to launch a single stock futures very soon, as well as index futures. So Kenya is definitely placed to offer those kinds of products to the market.
And you have talked about a number of African markets that are in the process of rolling out a derivative market. Then the question then comes: how comes then we still have very few of them, becoming successful in rolling out? For example, when you look at NSE, they have been chasing the derivative dream, for the last 3 or 4 years.
That's absolutely right. It is not easy. So one of the, I would say, key obstacles to the development of commodities market is the regulatory aspect. So you need to have, African markets need to have the right regulatory framework that will allow for those products to develop. Okay, things such as insolvency law, for instance, the recognition of collaterals within specific jurisdiction. In certain market, there's no such thing as recognizing certain collateral. So unless you have that as part of the law, it's going to be really hard to establish a well-functioning derivatives market. So there are a few aspects within that. There's also the aspect of understanding the regulation of derivatives market. A lot of the times, people have no idea how to do it and what's the way forward to adopt such product. There are also other challenges as well, which are related to the cost of infrastructure for the establishment of a derivatives market. Having the right infrastructure in place that will allow for those products to be effectively traded requires a lot of money. The establishment of a of a CCP will cost a lot of money. So there's also the cost barrier that is related to infrastructure. There's also other elements, and I'm not going to go into all of them, but I would say another key element for derivatives markets to sort of be successful is to have a well-functioning underlying market. So if the underlying market is underperforming and there's not enough liquidity in that market, this is not helping the case of having derivatives products, futures, options, etc., that will be successful at launch. And of course there's education, etc., but there's a lot more.
And you've actually touched on two very critical issues, that everybody is raising here, especially with the introduction of the derivative market. And this is, do we have sufficient liquidity to support derivative markets, and have we managed to conduct public awareness to a point whereby you have savvy investors who would actually invest in this kind of instrument?
I think in the case of Kenya, my understanding is that the market is welcoming the launch of futures within this capital market, and particularly by obviously the Nairobi Securities Exchange. And that's very important because the Nairobi Securities Exchange has conducted enough, continues to conduct enough forums and training to ensure that they provide the right education and understanding of what derivatives are, how they operate, in order to allow for those products at launch to be successful. But so far, a lot of the market participants have given a positive view and are welcoming the launch of derivatives markets, which is a very positive sign.
Very well. And when we talk about derivative markets, are they for everybody?
Well, of course not. They're not necessarily for everybody, but look, derivatives products are there. What are they? They're there to help investor, for instance, to hedge their position. So if you are in a market that doesn't allow you to manage your risk, then it's going to be a problem. Okay, so you should be able to have at some point in the life of a capital market the ability to hedge your price risk, the ability to manage your price risk. And this is the benefits of derivatives products, is that they allow you to hedge your position. So an investor that is worried that the price of a security will go up or down, he can go to the market and contract derivatives products that will allow him to hedge his position. So this is one of the main benefit, I would say, by having products like that for market participants that are looking at managing their risks.
And of course, that then makes a lot of sense, especially for a market like Kenya, whereby, you have cyclical droughts, where farmers, they lose a lot of, their produce. And of course, you have cyclical swings, of the market, whereby then you can hedge against such swings in the future.
No, that's absolutely right, and I think particularly in Kenya, in Africa in general, it's a continent that is very strongly based on agricultural output. So therefore, agriculture is a huge part of the African economies, and we all know that farmers themselves count sometimes in certain countries for more than 40% of the population. So you need to be able to give those farmers that are worried about, or not just worried, the ability to plan better and to understand at what price can they sell their crops, for instance, or agri-product in the future, and give them the ability to manage that price risk in a more effective way. So derivatives could be very useful for producers that are worried and wants to lock a specific price of a particular commodity rather than not having the ability to do so.
And when you scan the Kenyan market, do you think the market is liquid enough, it's deep enough, to sustain a derivative market?
I think the Nairobi Securities Exchange has introduced a lot of products that will allow a certain level, and of course this is not finished. It's a journey, all right. It's a journey, but the appetite is there. I think the reason why the NSE decided to go for it is because there is an appetite for those kinds of products. There's an appetite for issuers and there's an appetite for investors to be able to hedge their position. And unless you offer them a solution to do that, they'll be feeling the pain, particularly in volatile environments. So there is a need. Whether it's going to be successful or not, this is a different matter, but it seems that the Nairobi Securities Exchange is doing whatever it can to ensure those products potentially would be successful, particularly via the route of getting the market to understand what they are and investing a lot in education.
And finally, Selloua, because we have to come to the end, when you scan the Kenyan market, what is your take on the Kenyan capital market, and what is your advice to potential issuers?
I think that when it comes to the Kenyan capital market, I think that the structure itself, obviously the NSE has dematerialized back in 2014 and listed its company. I think they've done a lot since then, in the sense that they've launched a lot of products, so those products being ETFs, so exchange traded funds. They've also launched REITs, which are very which were launched this year. They're also looking at launching, as we know, derivatives products. So ensuring that there is enough product in the market for investors is a good thing. The other thing as well that the government has been supporting with when it comes to the capital market is taking away the withholding and capital gain taxes, which I think they did sometimes last year, and that was following the discontent by many market participants. But they've reacted to it, so they've helped that Kenyan capital market to work and to work in the most efficient manner. And I also think that the Nairobi Securities Exchange is the heart of the Kenyan capital market, and the continuous involvement and engagement with the regulators, with the issuers, with the investors is absolutely critical to ensure that the Kenyan market is capturing local, regional, as well as international investors, and ensure that they will continue to gain market share in this space.
Selloua, thank you very much indeed for joining us
You're
here.
welcome. Thank you.
Selloua Chakri is the head of market structure and strategy at Middle East and Africa. Joining us here on the Trading Bell, you're watching us. We are coming to you from the trading floor of Nairobi Securities Exchange. We are back shortly. Well, a scenic review of how the market performed in the last 1 week, of course, there with some marginal improvement there. Timothy Macharia is an equities trader at NIC Securities, joining us here. First of all, Timothy, I want to hear from you. The EMB bond, you know, the offer came to a close last week with a massive undersubscription of about 76%.
Sure.
What lessons have we learned from this?
I think first to say is we can say it's underperforming, but 250 million, at least from the retail, in the second such an issue is a slight improvement. We may say it failed because we failed to hit the target, but again on the other side, we really want to look at the paradigm shift from borrowing from the banks and going directly to the citizen, and now citizen lending direct to the government. I think for me, I can say it underperformed, but again, we are one step ahead from how it would have been. And from your question is that for maybe things that we can improve, I think sensitization was there, but I think not everyone understands what is a debt and what a bond means. So in terms of education to the citizens, that needs to be done. In terms of knowing that your money is secure, because this is the money that you're dealing with, in terms of liquidity, and again, even on the market makers, because they were just one market maker. So if you can put a lot of market makers in the pool, so that maybe maybe you can have more than 10 banks providing the same, then I think you can get more numbers. And then also the banks themselves also taking the initiative to educate their customers of the same. Yeah.
So this should not be the end of such offers.
I think we are moving, and in years to come, this will be the way to go. This will be the way to go. This is one great achievement, I think, to say, because if you look at Africa and you look at our setup and market structures, this is the first. We've not seen other countries try such, that you can get money directly from the citizens. In previous and in the traditional way, we borrow from pension funds, we borrow from the banks. But now we are borrowing directly from the person, the citizen, the taxpayer. I think that is something, and with time it will be appreciated. Yeah.
I think, you know, picking from what you're saying, yes, this is very true. This is the first time that, you know, a government is trying to use technology, you know, to raise resources from the general public. I think it's, of course, a plus for Kenya, but of course there are lessons that we have learned or that we can apply in the undersubscription. Let's have a look at the market, and it's still a sea of orange and green.
Yeah.
Green is an indication that somehow we are getting out of the wood.
Yeah.
But the question is, are we out of the woodwork yet?
Let me say this: we are not where we were, and we have come a long way for this year. And were it not for the conditions of the political issue that we have today, we had moved. And I remember it's during the Supreme Court ruling day that we saw a highest drop in terms of prices, but from there we have peaked. I think we have known, we are getting used to this, and there's nothing changing. So that is something, and you can see the confidence in the market. Prices have not dropped. In fact, in some counters like Safaricom, again, after even the Supreme Court ruling, it has touched a high of 27. This is something that you didn't expect. things like KCB, even after closing the dividend, the book closure on the dividends is still above 42. So this is a higher price than it was before the rate cap. Before the rate cap, KCB was trading at 38.
Yeah.
Now it's after the rate cap and all this political hullabaroos going around, but we are still at 42. That is something. So there's confidence in the market. I think people are going are adapting on the political issue going around, and we have adapted, and it's no big issue.
I still want to hear from you. I mean, when you look at all the market participants or investors, who are trading in the market, you realize that close to 75% of foreign investors, are offloading their shares, on the market.
That is true.
Whereas local investors, they still have a lot of faith in the market. Why is this happening?
Let me say this, for foreign, and I think this is something I have observed. For the foreign, they are not in the ground. But for the local, we are in the ground. We can feel the ground. So for foreigners out there, they have options. And remember, the kind of foreigners we deal with, these are big pension funds with options of investing in other countries. They allocate depending on a market. So, if, for example, a fund in the UK with an allocation on frontier markets, you have choices. It's not only Kenya. So you have Kenya, you can invest in Egypt. And just to quote, last week, Friday, Kenya was the worst performing frontier market. So meaning that their peers are way high. Though most of the countries in Africa, we just have 3 countries in the frontier market segment, but that is not to say that the others are not performing. And again, look, why should a foreign investor invest with all these political risks? And other countries like Egypt are stable, Nigeria, they are stable. There's no risk ahead. So I think it's short term. But again, for the local, you remember for the good part of this year, we have seen them being net buyers. They have really been doing 75% up. Now we have seen locals, now it's almost 50-50. In fact, some other days even 70 to locals 30. I think that is something, meaning that our locals are coming back to the market.
Timothy, as we wind up, the market is finding itself in this mess because of the risk associated with our political system.
Yeah.
What could be your message to politicians watching this program?
I think Kenya is ours. We are all citizens of this country, and elections will come and go, but this country will remain. And this risks of us every 5 years coming back and there's a capital fright and such, and economic is hurt, it's not good. It hurts down to the deep of our pockets, and it's not good for this. So I would urge that we have system and structures that work, that election will be just another activity. It's not something to worry about.
Very well.
That's the kind of climate that we need to create. And after this election, this is a make or break for Kenya. Because if we do this in a good, conducive way, meaning that for the next 5 years, foreigners will have shown them that we can conduct ourselves and there's no risk.
Timothy,
yeah.
Thank you very much indeed.
Yes, thank you, sir.
All the best.
Nice having you.
Asante sana.
All right.
Timothy is an equities trader at NIC Security, joining us here on the Trading Bell. Stay right here.
My name is Eric Masawa. I would like to ask the amount of money to have to invest in the capital markets.
Thank you so much, Eric, for your question as to how much you should invest in the capital markets. I think there is no limit to what you should invest. It is basically a factor of your risk appetite, the option of the financial instrument you are investing on, and your liquidity needs. So you choose depending on how much would you let go, and how much is in that financial instrument, how much risk is contained in that financial instrument. So you can invest as much as you want, as long as you can absorb the risk. Thank you.
Well, and with that historical perspective, we've come to the end of Trading Bell program for today. Many thanks indeed for your company. We look forward for the same next week, same time right here on KBC Channel 1. Remember, our communication channels are open. SMS line is 22162 and the Facebook page is The Trading Bell TV Show. My Twitter handle is @O'Brien Kimani and @The Trading Bell. Well, on behalf of the entire Trading Bell crew, thank you very much for your company. See you again on Thursday. We'll take you back to Broadcasting House. Have a good night.